I'd now like to introduce our next panel. Craig Burns, the manager of our energy group at the ASC, will be the moderator for this panel, and it's a discussion about opportunities for Alberta. Joining him on the stage this morning, Jackie Forrest from ARC Energy Research Institute, Wes Jickling from Pathways Alliance, Stephen Mason from Reconciliation Energy Transition Incorporated, and David Van Assem from Alberta Innovates. Craig, over to you.
Thank you, Samir. Appreciate that. So welcome, everybody. Welcome to our panel here, and really excited to have the opportunity to speak with you here today. We are going to, maybe what we'll do is just give you a little bit of housekeeping here. So yes, Craig Burns, manager of the energy group here at the ASC. Just so you know, we are within the corporate finance division. Our focus is all things energy, so if you have any comments, questions, or interest in discussing energy at any time, we welcome your feedback. We have, I just point you to our website, asc.ca, looking for contact information. So Canada's energy industry has always demonstrated exceptional expertise, innovation, and leadership. These attributes have never been more important than they are now, as the industry responds to expectations for more responsibly sourced and supplied energy. With us today are 4 energy leaders whose organizations see tremendous opportunities amongst the challenges and are spearheading Alberta's energy transformation. They'll inform and inspire you as we discuss these opportunities. What we're going to try to do here is integrate feedback from the audience, contributions through Slido. So if you have any comments or questions, please submit those. What we're going to try to do here is, as we go, I'll try to respond if I can work it into the Q&A. We'll also have a dedicated piece at the end where we will more formally address comments. If we don't get to something, we will endeavor to get back to you. If you would leave your contact information, please, your name and email address would be fine. We will reach out to you following this and try to get a response to you. So I will be using on my phone here, just I'm not up here texting and maybe ordering groceries or anything. I will be trying to manage the Q&A here. So next we'll introduce our panelists here. So we have Jackie Forrest on my left here, Executive Director, ARC Energy Research Institute, and Managing Director, ARC Financial Corp. Next to her is Wes Jickling, Vice President, Technology Development and CEO of Canada's Oil Sands Innovation Alliance, Pathways Alliance. Stephen Mason, Chairman and CEO, Reconciliation Energy Transition, Inc. And David Van Assem, Director, Hydrogen Center of Excellence, and Director, Clean Technology at Alberta Innovates. So biographies for everybody are available on our website here, on the event website. And the next thing we're going to do here is we're going to have an opportunity to listen to our panelists talk a little bit about their organizations, its role in the Alberta energy industry, how each is demonstrating exceptional expertise, innovation, and leadership in the creation and pursuit of energy opportunities. So the first person I'm going to ask to speak to that is Jackie.
Great, thanks, Craig. Well, I hope I inform you. I'm not sure if I can inspire you, but I'll try. So ARC Energy Research Institute is the research arm of ARC Financial, which is a private equity firm. We're the largest energy-focused private equity firm in Canada, and we are investing in both oil and gas and clean energy. We're very active in Alberta. We've invested in over 200 companies over the life of our firm. And we never actually calculated how many were in Alberta, but I did a little informal poll this morning, and some people thought it was probably upward of 80 or 90% of those businesses have been Alberta-based historically. The institute which I lead is involved quite a lot in ARC Financial. We help inform the strategy decisions and decisions made around the boardroom table at ARC. We help inform our portfolio companies, our investors, and the public too. I got to do my own plug for my ARC Energy Ideas podcast, but Peter Terzaki and I host a weekly podcast on energy issues in Canada and beyond called ARC Energy Ideas. You can check it out at our website or on any app. But we get involved in the public debate around energy, whether it be policy, economics, kind of the whole gamut. I'll just come back to what we're doing today. You know, For most of the funds, we have invested in both clean energy and oil and gas. There was a couple of funds where we didn't, but the current fund, Fund 9, we're investing in both, and we're excited about the opportunity in both. So with oil and gas, we think Canada and Alberta has a great opportunity as a secure source of supply in a world where energy security is mattering more and more. We're only about 25% of the world's oil supply comes from countries that would be considered stable and secure and non-corrupt like Canada. So we think that's going to become a very important differentiator for Canada. And also, although we're not known for being low carbon today, and in some respects we're not today, we are, I think, in the next 10 years going to make a major change in that and become low carbon. Our conventional production is already lower, but not the lowest, and I think over the next 10 years that and the oil sands will both make big changes. So hopefully we very soon will be both secure and a clean source of supply. On the clean energy side, we see a huge opportunity. We're going to see a lot of growth in clean energy. It's not a fringe business. Globally, over $1 trillion is spent, more than twice what's spent on upstream oil and gas today. And we see a lot of opportunity for growth in that going forward as well. And we're very interested in areas like low carbon fuels, like biofuels, electrification. I mean, almost all the money that's spent today is in the area of electrification. It's mature, it's ready to scale up. Greening the oil fields we're very interested in, especially here in Canada where a lot of the emissions are from oil and gas. There's a lot of opportunity in reducing those emissions. Carbon capture storage is another area. So maybe I'll just leave it at that and look forward to the discussion.
Fantastic. Thanks so much, Jackie. Wes.
Yes, thank you, Craig. So I have the pleasure of working with the Pathways Alliance, which is, if you've seen the billboards or the ads on YouTube or TV, it's made up of the 6 biggest oil sands producers in Alberta. And those oil sands producers that form Pathways produce about 95% of the bitumen produced in the oil sands. So it's the 6 big guys. Those 6 companies came together about 2.5 years ago, really around the unifying goal of getting to net zero emissions from oil sands operations by 2050. And to take it a little bit further and to maybe build on what Jackie's saying, really this is about becoming the world leading or the globally preferred responsible producer of oil. Right? High ESG, probably world leading ESG, probably the world's most stringent environmental standards and regulations. Now you've got this commitment to net zero emissions from oil sands operations. So a lot of collaboration occurring between competitors, very meaningful. And the net zero plan, there's 3 phases to it. I'll get more into phase 1. I think there's probably a point in time where I can get into that during our talk here. But we're on track to build one of, if not the world's biggest carbon capture network. Carbon capture facilities, carbon transportation pipeline, carbon sequestration hub, 40 million tons a year that's being built to, one of the world's biggest. It's not just emissions we're focused on as Pathways. We're focused on land and water and tailings and environmental monitoring and so on. Right now, first among equals is the net zero challenge, but there is a ton of work happening and collaboration occurring in all of these other areas of environmental responsibility and stewardship. I can talk more about that. Maybe just the final point, something that I'm at least super proud of and I wish more people knew about is just that idea that you would have 6 of Canada's biggest companies, publicly listed companies, whose CEOs meet every Friday morning for 2+ years. Every Friday morning, 6 CEOs get together and talk about net zero. What roadblocks need clearing? What questions need to be answered? How can we push? I think that's super meaningful, and that sends a signal all the way through those companies. And we're seeing just a tremendous level of collaboration, communication, co-funding, sharing intellectual property happening. It's been going on for a decade plus, but it's really been accelerated by the CEOs and the senior leadership in those companies. Super proud of that. I don't think that's happening elsewhere in the world. And yeah, happy to be part of the panel. Thanks for having us.
Thanks so much, Wes. Appreciate that. Stephen?
Yeah, thank you, Craig. Good morning, everyone. I am Stephen Mason, the chairman, CEO, and founder of a company called Reconciliation Energy Transition, or READY, as we live in a world of acronyms. READY has evolved from a broader vision, which called Project Reconciliation, which I'm also the founder of. And really that vision on Project Reconciliation is to change the model that if we are going to get major infrastructure projects built, then we have to have a different view on, rather than having consultation about promising of jobs when a pipeline is being built, and of course once it's built the jobs go away, or some level of tokenism of surface lease rentals, but have a conversation about material equity participation. And as I often have said, being involved with conferences and being on panel discussions, when I say material, it's not 10%, it's not 15%, it's not 20, in fact, it's not even 25, it starts at 30. And that truly is a basis of having a place at the table for the landowners, the indigenous peoples that are impacted by these projects, to be involved in the early stage development, in the environmental impact of these projects, but also have a voice at the table and participate from an economic perspective. RETI has evolved out of being in a hurry up and wait for the federal government to finally complete the Trans Mountain Pipeline, but also to get to a point of what has been a 6-year journey of hurry up and wait to figure out how, when, and to who they're going to sell it to. But the vision with in and around the ownership of Trans Mountain was to create a generational wealth fund, that the material portion of that free cash flow that would come off that percentage ownership would be there to reinvest in other infrastructure projects like high voltage transmission assets and public-private partnerships with municipalities. And it was through that vision that we evolved in this energy transition world we live in on bringing a different platform while we were waiting. We were awarded the Calgary region, East Calgary region Carbon Sequestration Hub. We went up against a considerable amount of competition. We obviously met the criteria technically and our plan to develop, but also by bringing in a material interest from, starting with Siksika Nation, whose territory we sit in as we're having this conversation, and the broader Blackfoot Confederacy and Treaty 7 as a whole. But our conversation now has evolved beyond just with Siksika and more of the inclusion of the full Treaty 7 nations. And in that vision of that sequestration hub, we've advanced at least the early stage engineering of a sustainable aviation fuel project to serve YYC and beyond. And that again brings material Treaty 7 participation.
Excellent. Thanks so much, Stephen. David?
All right. So hi, Dave Van Den Assen with Alberta Innovates. I'll give you a little bit of an overview of Alberta Innovates in case you aren't familiar. We're a little bit earlier up the deal flow funnel from the projects and investments that you've been hearing so far. We tend to work in that earlier stage of technology de-risking to enable later stages of investing in things. But the organization itself started about over 100 years ago in 1921 as the Scientific and Industrial Research Council of Alberta, later changed to Research Council of Alberta, and then Alberta Research Council after that. So I think maybe somebody made a typo in their stationary order at one point and they just decided it was easier to change the name. And then Alberta Energy Research Institute, and now Alberta Innovates. So if you recognize any of those names, it's all Alberta Innovates now. And the organization is set up to solve some of the big problems as Alberta's innovation engine. And so, for example, one of the first projects that was one of the founding reasons for getting this organization up and running was figuring out how to turn the bitumen that's available up in the north into a marketable product. At the time, the idea was to figure out how to make it into an asphalt. And now, of course, we've done great things since then, and Wes can tell you all about that. But the organization itself, as I mentioned, provides non-dilutive funding to help advance technologies. It helps with business advice and support for entrepreneurs and SMEs, as well as connections, networking, and collaboration support. So for example, there's a regional innovation network with 8 or 9 different hubs across the province, and they are sort of the focal points for a lot of the convening that can happen in these different regions to support the initiatives that are required in those particular areas. Within the Alberta Innovates family, we have Innotech Alberta and CFR Technologies. Both are focused on research, technology development, prototyping, and scaling services. So they're the ones with the lab coats and the expensive pieces of equipment and the machines that go ping, and do all the fun lab work that we need to get technologies advanced. They'll help with prototyping and scaling if you have a solution that you need to get closer to market readiness. On the non-dilutive funding side of things, it's a big chunk of what Alberta Innovates does. And we have divisions that cover health, post-secondaries, entrepreneur investments, and clean resources. I'm in clean resources, so I'm going to tell you a little bit more about those areas. We have individual focus areas within bioindustrial materials, bioenergy, and circular economy. So that's everything plastics recycling through to waste to energy and forestry product value add type of solutions. We have a bitumen beyond combustion, which you may have heard about, which is really more than just bitumen, but taking the low value ends of a hydrocarbon barrel and upcycling them into high value items. So asphaltenes, for example, extracted out of a barrel of bitumen that can then be converted into high value carbon fibers, carbon nanomaterials, and those sorts of things. So solutions that drastically increase the value of these products. So for example, some of the high value nanomaterials can go for $400,000 a ton. Well, you won't get that from a barrel directly. So there's a lot of value that can be created from doing these new and novel innovations. We also have a cleaner hydrocarbons team that's looking at producing hydrocarbons better. So those include partial upgrading, emissions management, et cetera. We have a digital area that is, as you can imagine, growing rapidly. And hopefully we're going to be able to do another call for proposals through our digital side in the near future. Renewable and alternative energy, which includes the wind, solar, geothermal, is also now including small modular nuclear, which is a very exciting new field for Alberta. So I'm very keen to see how that develops. Critical minerals and mining. So we've supported some of the early days of organizations like E3, Summit, Nanotech, and a number of others. And just super excited to see how well they've done so far, and will continue to grow. Carbon capture, utilization, and storage, and I'm going to defer to Wes for some of the exciting things that he can talk about in that area as we get through the conversation. And finally, Hydrogen Center of Excellence, which is the funding stream that I'm looking after, and we can get into a bit more of that later. We also have a sister organization, Emissions Reduction Alberta, that does later stage funding. So where we leave off, Emissions Reduction Alberta picks up so that they can help technologies and solutions advance to commercial readiness, where the institutional investors start to get excited and take on.
Thanks so much, David. So next we'll move into our discussion part here, and we break it up into 3 different sections. First one is exploring opportunities, And what we'll do here is I'll pose a series of questions to a panelist, and we'll go from there. We'll see what kind of contributions we get from the others, and hopefully we get some stuff through Slido as well to help us out here. So Jackie, first to you here. So you mentioned the opportunities for electrification of oil and gas projects and opportunities involving biofuels and hydrogen. Can you please provide some details regarding these opportunities and some insight into how your organization is making investment decisions and deploying capital in response?
Okay. Well, that could be the rest of the hour, so I'll make it quick. But electrification, I just want to point out, of the 1.1 trillion spent globally last year on clean energy, or what's considered energy transition now, it's been renamed, basically all of that was in electrification. About half of it was wind and solar generation, and we've seen that here in Alberta. We had 1.3 gigawatts of new wind and solar built last year in Alberta. This year, it's expected we'll get even a greater gain, and potentially $4 billion of CapEx will be spent in Alberta on just wind and solar generation projects. Just to put that in perspective, that's like a third of all the oil sands spending. You know, oil sands CapEx spending is expected to be $12 billion. That's before you start doing that CBS project, where it's really going to ramp up. So anyway, it's a significant opportunity here in Alberta. Obviously the moratorium has put some question marks in terms of what it will be next year. I'm optimistic. You know, there are limits to growth here, and I think even I'm on the Renewable Energy Association of Canada's board, CanREA. I think we won't deny that there weren't some issues that could impede growth. So hopefully this inquiry will enable some of that to get surfaced and solved, and hopefully de-risk these investments going forward. But we've got a great opportunity here. Battery storage, surprisingly, globally is very small. Only $15 billion of the $1.1 trillion went into utility-scale battery storage. I think that's an area that's going to grow as a necessity as we get more and more intermittent wind and solar in not only Alberta, but in other markets as well. You may surprise you, but almost half of that $1 trillion was EVs. It grew 50% last year. EVs are at the inflection point. They're taking off, and they're going to create a ton of investment opportunity. Of course, ARC's not going to be investing in the next Tesla, but there's so much needed. Oh, not good? Okay, that's good. I felt like there was a real echo there, so that already sounds better to me.
Yeah, it sounds nice.
Okay, now I don't sound like Darth Vader.
Way better. We can hear you.
All right, so ARC's not going to invest in the next Tesla, but think of the infrastructure needed to support the EVs and the demand growth that will come from that, whether it be more distribution, transmission, more chargers, more high-speed chargers. You know, Alberta's a real laggard here. And I think the investment's probably going to happen in other places in Canada first, where we have higher density and more electric cars. But we're going to need it because I've been driving an electric car for 3 years, and it's pretty bad here in Alberta in terms of the infrastructure. So electrification is ready. It's, you know, it's at the commercial liftoff point, and it's ready for growth equity and a lot of money to start flowing. I think that, by the way, that 1.1 trillion grows to by 50% or more between now and 2030, and a lot of it's in electrification. Some of those other areas are still very small, but I think are going to grow quite a bit in the next 10 years. Like carbon capture storage globally is only around $6 billion of that money, very small on a global scale. I think with what the US is doing, the incentives they put in place, that's going to grow significantly in the US, and I'm hopeful in Canada it will grow too, although we need some clarity on the policy here for that really to take off, like I think it will in the US. Low carbon fuels is another really interesting area. I think biofuels, including liquid biofuels like renewable diesel, you know, what I like about biofuels is they're chemically the same as diesel that would come from oil and gas reservoirs, except that they are much lower emission. And when you think about replacing all those machines in the world that take oil and gas, that's going to be very hard to do in a short time frame, but we can start to provide fuels to them that are lower carbon. And renewable natural gas, which is chemically the same as natural gas that comes from oil and gas reservoirs, but it has negative emissions because it is basically capturing methane that was being released from things like landfills or manure or water treatment plants, and instead of releasing that to the atmosphere,
putting that into the natural gas system. And so there's actually some pretty supportive policy in BC for renewable natural gas, so that's another area. I could go on and on, but that gives you a sense of, I think, some of the areas
Perfect.
that we're looking at.
I think we might have the opportunity to come back and touch on some of those a little bit here as we go. Wes, so just hoping maybe you can describe the pathways, what you guys are doing in your foundational carbon capture and sequestration project, its status, what it's expected to accomplish, and why it's critical to not just the organization but the energy industry in Alberta. I know we've talked a little bit about this, behind the scenes, in terms of the collaboration. I think that's such an important point as well to emphasize.
I think I've got a bit of a dilemma here. I'm not sure if I should use that mic or just keep going.
I think you're okay.
Okay.
There's a lot of echo.
We're good. That's out of the way. Yeah, so maybe just a little bit of detail about the foundational project first, and it's kind of a weird name, but this is one of the world's biggest carbon capture systems, transportation sequestration systems that we're trying to build and have in service by 2030. And I'll just talk a little bit about and put some numbers around that, and then maybe talk about why that's important for Alberta and the opportunities that'll bring. So this is a 400-kilometer long pipeline. It goes from the Fort McMurray oil sands producing region, goes to the Christina Lake area where there's a number of in situ oil sands producers, and then extends down to the Cold Lake region where there are further producers or further production, and that's where the sequestration hub, where it will be permanently stored in deep underground. That 400-kilometer pipeline will, by 2030, tie in or have 14 individual capture facilities, these plants that capture the CO2 from flue gas, pressurize it, put it in the pipeline for transportation and storage. And so it's the individual companies that will be building those 14 capture units. Those won't be built by Pathways, but Pathways members will build those. So by 2030, you're looking at about 11 million tons of CO2 captured and stored every year. The system that we're building, that pipeline and the storage hub, that's expected to we're in design phases, but that is potentially up to 40 million tons a year. It'll be built to hold that capacity, and by in the 2030s, that 14 capture facilities should grow to 20 and maybe more. There's opportunity for other emitters, other, single source, big emitters in that region to tie into the line and have their CO2 stored permanently as well. So this is an audacious goal. It's an audacious project, but it's all part of, if you think about what the oil sands in Canada is trying to do, it's to bridge from a world where all of the economic activity is really fueled by and built around liquid fuels and hydrocarbons and fossil fuels. How do we, in the interim, before all of the exciting low carbon technologies that Jackie's talking about, those will come on, those will be commercially deployed at scale around the world. But what are we going to do now? And what we're doing now is trying to become that world-leading, globally preferred producer of oil, low emissions, strict environmental regulations. This is what it takes. It takes audacity, and it takes feats of engineering, aggressive timelines, and just extreme collaboration to get that done. The engineering and the design work continues. We're completing our second year of field work, environmental field work. We're on track to submit regulatory applications by year's end. We're in negotiations and conversations with provincial and federal government for co-financing certainty and regulatory certainty. We need both of those things to proceed with the project. I think the opportunities here are tremendous. This is really, again, a world-leading project. It'll be one of the biggest in the world. And you think about, what it's going to take to design, build, maintain, and operate that, one of the world's biggest CO2 capture, transportation, and storage systems. There's tremendous opportunities, not only for individuals and trades and employees and staff and engineers, but also for companies to get involved in this space where I think already Alberta has a leadership role in the world in carbon capture knowledge and expertise and experience. I think that's just going to go to the next level, and I see that as a real opportunity just at a high level for Alberta.
Thank you, Wes. Stephen, can you talk a little bit about, maybe elaborate on the East Calgary Region Carbon Sequestration Hub and the Calgary Region Biofuels Facility? Let's talk a little bit about their status, but I think maybe even more importantly, what they're intended to accomplish from both an economic and reconciliation perspective. And maybe as part of that, I know I'm asking a lot of questions here, if you could touch on what economic reconciliation is and how these projects are expected to advance it.
Yeah, well, first of all, just a summary of our projects. So as I mentioned, we were awarded the East Calgary Carbon Sequestration Development Permit. The area for that development permit is 40 townships. We went through an extensive technical evaluation. Over the years that I've spent most of my career in the oil and gas business, a number of my friends and associates were drilling seismic anomalies into what was identified as the big carbonate reefs, the Nisku and Leduc reefs east of Calgary, and they continually hit the reefs. But unfortunately, rather than those reefs full of hydrocarbons, they were full of water. They were wet, which is always the bad news you got when you tested these reservoirs. These reservoirs are ideal for permanent storage, so we've identified 4 saline aquifers that are very ideal for permanent storage. In our work and lead up to the application, we see, and by third-party support, the capacity to accommodate about 10 million tons per year of storage capacity for beyond everybody's lifetime in this room, and certainly mine. So we feel that the technical basis of this East Calgary hub is there for ultimately the capture of CO2 from our power generation in Calgary, starting with the Shepherd Energy Center, which emits, owned and run by ENMAX and Capital Power, which emits about 2.2 million tons a year. And in a broader vision for the hub, and we're working very closely with a major midstream company on a view. I can't announce who it is, or I'd have to lock everybody in the room for the next few days. But over the next few days, you're going to hear some announcements from us on 2 different partnerships, one with a major midstream company, but also with a major global Asian-based conglomerate that has now come to a point of partnering with us. The vision around this hub is to be more of an open access and to be able, beyond piping CO2 from our power plants, but also railing in and trucking in smaller emitters and really capturing a lot bigger regional area of smaller emitters capture. And then from there, as I mentioned, the other vision around this project is a sustainable aviation fuel project, which will also involve material Indigenous participation with the Treaty 7 nations. The first question that always comes up when I present this vision of a sustainable aviation fuel project, well, where's your feedstock coming from? Because that's the key to these projects, is feedstock. And the vision there is that the Treaty 7 nations, to start with, have a land base of about 1.4 million acres. That largely lands that sits pretty fallow to grazing for a few head of cattle or horses, and there is a basis and a really good conversation going on with the Treaty 7 nations about providing a repurposing of even a small percentage of that land to grow the biofeedstock, whether it's canola, camanella. The other interesting component for this project is the other feedstock we're looking at is tallow. and one of the things we're renowned for in Alberta is our beef industry. And within 100 kilometers of where we sit here today, we slaughter about 12,000 head of cattle a day, that each cow will produce about 100 pounds of tallow. So we're ideally situated for the basis of this biofuels project. But getting into the economic reconciliation, the view here is that the Indigenous participation is anchored at the feedstock input side, but also has a material equity participation all the way through the value chain, which will include the crushing unit for the crushing of the rapeseed, or in this case, canola seed, storage around that, the treatment facility, the SAF plant itself, all of this to be located in the Cardsland area.
Perfect. Thanks so much, Stephen. David, can you talk a little bit about the role of the Hydrogen Center for Excellence, what it's playing in the development of Alberta's hydrogen economy, and then maybe touch on some of the opportunities that came out of the first round of funding that you guys had, and maybe where things are with this current round of funding.
Sure. So the Centre of Excellence was stood up in April last year at the Canadian Hydrogen Conference with an announcement from the Minister. It was started with $50 million in seed funding from the province of Alberta, and the intent was to basically lift up the hydrogen use in the energy system, so helping to integrate a hydrogen into the energy system within Alberta and for export. We focusing in on three different areas or focus areas. There's the ecosystem component that we're working on that is a combination of public awareness, of which we've done a baseline survey and are starting to now come up with plans and strategies for implementing some ideas out of there. There's a component of ecosystem, how do I say it? Ecosystem development in terms of building up partnerships and relationships between parties and connecting folks together within the ecosystem. You know, as I mentioned earlier, one of the roles of Alberta Innovates is to do that. So a lot of hub development support that we're working on with that. The main component and the main portion of our funding is going towards technology advancement, as I mentioned, between that bench scale proof of concept through field pilot. And then feed studies as well for later stage projects. And then as well, we are putting a portion of the dollars towards augmenting the testing capabilities within Innotech and CFR, which we've allocated those dollars. They're building things and starting to get projects through the door from local and international partners. So there's very exciting things happening there. So to the second part of your question, we received in our first competition, which launched shortly after the program was announced, we received 68 proposals for a total, I think it was $93 million of funding request out of 300 and so million total project cost. And we, through 2 stages of proposal reviews, went down to 18 successful projects. Those are operating now. They cover a fair range of solutions. They cover the full value chain from production technologies through transmission, distribution, storage technologies, as well as a variety of end-use technologies. And I won't list them all off for you. They are all posted on our website. There's little 2-page summaries of all of them, so you can have a look at those. But just give you an overview, there's 4 that came from the post-secondaries. There's 7 SMEs, entrepreneur/SME projects. Then the remainder are from the larger organizations. We have 3 or 4 feed studies that are being done that will unlock multi-billions of dollars in foreign direct investment as well as infrastructure investment once those feed studies are complete. So that's super exciting. And yeah, on the end uses, we have everything from several hydrogen diesel dual fuel testing projects that are going on. So you might start seeing those on the highway pretty soon, which is super fun. There's some hydrogen production technologies for using novel methods like pyrolysis, where you produce, you run your natural gas through the system and you end up with hydrogen and solid carbon. So there's no CO2 generated from the process, which is really exciting because it avoids the whole pipeline thing. And then you've got another product that you can upcycle to the higher value carbon products like I mentioned earlier. So there's some really neat opportunities there. And there's some that are focused on residential heating, using 100% hydrogen. There's quite a few others in the area. So power production through hydrogen use. So quite a few exciting areas there. And the second competition, just to round it out, is underway right now. We have 95 proposals this time, so quite a jump. And again, covers the full spectrum of the value chain, which is really exciting. We're doing our initial reviews now. We'll do a two-stage process, and we'll probably by January have our answers and start the contracting stage. The cool thing is, in parallel, this funding call is being paralleled by our sister organization, Emissions Reduction Alberta. So us and Natural Resources Canada have $25 million on the table for the early stuff, and Emissions Reduction Alberta has $25 million on the table for the later stage stuff. So they have 39 projects. So altogether, it's hundreds of millions of dollars worth of projects that can unlock billions. It's super exciting.
Excellent. Thanks so much. Really appreciate that. Move on to the next section here. So this is the onwards part. This is execution of the projects we've just talked about. Wes, I'm going to go to you first here. So this province has a history of success with respect to energy. In the face of skepticism, I mean, I think that this is sort of a common theme. You know, we get excited, we think we can do something. There seems to be skepticism out there. We overcome that. Some say that your organization is relying on unproven technology, that carbon capture and sequestration is too ambitious and costly. Future demand for hydrocarbons doesn't support the project. What's your response to this?
Yeah, I think just to your first point on the skepticism, I think that, you know, historically, I think even the very beginnings of the oil sands industry, and there's others and other historians and folks that have been around the industry longer will have better knowledge of this, but it was never, there was always skeptics that this would never be economically viable. Yes, it's the third largest reserve of oil in the world, but the oil sands, and it'll never be viable. And then, you know, it's from there through the decades, I think that there's always been skepticism and questions and certainly scrutiny of the oil sands, and I think we've overcome that and continue to do so. So this, I think, is another chapter. This is a real defining challenge, real defining moment for Canadian industry, or for Canadian energy, particularly for the oil sands. So this isn't unfamiliar territory, I guess, is what I'm trying to say. I think what we've got is, maybe I'll just go to the point. I keep hearing that this is an unproven technology. Well, I don't think so. I think it's, you know, capital investment, you're saying, Jackie, was $6 billion a year globally, and that's not a lot. I think that was the number, 6 billion. And I think that, you know, I think that kind of prompts people to say, well, it's unproven. That's why it hasn't been deployed, or it's inviable. And just to kind of comment on that, there are commercial deployments of this for over a decade in this part of the world, in this part of the country. You have Boundary Dam 3 in Saskatchewan. It's my hometown, and friends of mine work there. And you know, you have the Quest carbon capture facility, the Scotford upgrader in Edmonton. It's captured 10 million tons of CO2. You have the Alberta Carbon Trunk Line, the largest trunk line in the world. These are some world-leading commercial deployments of the sort that people say are not possible or not viable, but they are. I think the advantage we have here is we now have 10 plus years of experience and knowledge of building and operating and maintaining and refining, but you know, optimizing the performance of these things. So we're in a good spot. So unproven, I think part of that comes from how expensive it is. Yes, it is expensive. And that's the focus of Pathways. One of the major focus areas for Pathways is, can we lower the cost of carbon capture? The business of taking waste CO2 out of flue gas. Can we lower the cost of that? We got a ton of studies and a ton of research going on to find the next generation of carbon capture, so we're overcoming that. I think the other one, maybe just on the costly side of it, that's why we need support, right? We need this co-financing, we need regulatory certainty on this. If you look around the world, Norway, Netherlands, UK, the US, even previous projects in Canada, at the public support or the government support for a carbon capture project, you'll see that, yes, it's expensive and therefore needs public support. And just as an example, in Norway, you know, building their 0.8, I think 800,000 ton capture project, ours is going to be 40 million. Theirs is, you know, 2/3 of the capital costs are covered by the public, by government, and 100% of operating costs for 10 years. You know, that's probably not the level we're going to get to in Canada, but it gives you a sense of the money that's needed. Maybe just a short rant, I promise, on the falling demand, and that the demand for oil will fall, thereby making, you know, carbon capture sort of a loss leader and sort of a stranded build. And these are Václav Smil's stats, which I liked. There's $100 trillion of GDP, global world product, I guess. Annually, that's expected to double by 2050. 8 billion people, 8 billion energy consumers, going to 10 billion by 2050. 60 billion tons of materials every year, extracted, produced, transported, consumed. 3 billion tons of grain, 300 million tons, the list goes on and on and on and on. All of that is sort of built around liquid fuels. Not all liquid fuels, but the transportation, production, consumption of that relies on liquid fuels. There's exciting things happening. Electrification and low carbon and, you know, energy storage and solar and wind and renewables, it's all exciting, and I hope we need to find ways to accelerate that. In the meantime, we're at record levels of oil consumption. We need to do better. We need to clean up. We need to reduce emissions. We need to be environmentally responsible, and producing that currently 103 million barrels of oil a day. That's what we're trying to do. And without carbon capture, this so-called, you know, unproven, you know, too expensive, inviable technology is absolutely critical. We have to find a way, and that's exactly what we're doing. Long rant, sorry.
I'm just going to add, you know, in terms of the oil demand, another kind of useful little point is that light-duty vehicles is where electric technology is really kind of threatening oil demand, but that only 25% of global oil demand is from light-duty vehicles. So 75% is from areas where we have very early stage technology. I would say like medium haul trucking and
Shipping.
Well, shipping, we really don't have an alternative at all. You know, honestly, 60% of oil demand, we don't have any commercial or even very early stage technology to replace oil. So it's very, very difficult to see how these net zero projections that get us down 25 million barrels a day by 2030, there are no alternatives to oil for us to do that. So I think they're very, very unlikely, and we will be using oil and gas for a long time. Therefore, it makes a lot of sense to reduce the emissions associated with it. So.
Perfect. David, can you talk a little bit about the obstacles that, or I should say maybe some of the key things need to be addressed in order to achieve this hydrogen economy that we've talked about?
So there's three main things that I'm seeing that we need to work on. First is setting the stage. And by that, I mean we need updates to codes, standards, regulations in some cases, and in some cases policy. So our role in that is to support the updating of the codes and standards, and then if there's technical analyses and technical studies that are required to help inform the regulators and the policymakers to how to do what they do, then we're absolutely game to support that. But they own those fields, so we don't want to dig into that too much. We certainly are here to support it, though. The second piece is meeting supply and demand. So while there's a lot of organizations that are ready to make hydrogen, they just want a market, there's smaller demand centers that are starting to evolve, and they can be the commercial freight side of things, they can be I mean, forklifts are already using hydrogen to some degree, so there can be an expansion in that area. But there's other areas that, on their own, they can't use enough hydrogen to justify a producer making several, ton per day facility. But if you aggregate those demand sources, and then that gives the producers an opportunity to have something to really sink their teeth into. And that's a lot of the work that the hydrogen hubs are doing. That Edmonton is, of course, first out of the gate, and they're having some, a lot of work being done in that area. Calgary's coming. We're having those conversations to help build the hub here, and I'm having a couple other conversations around the province with other hubs that are nascent. So very exciting times to be involved with that at the bottom up. The third piece is next generation solutions. We can do hydrogen now in pretty much all these areas, but we can do it better. We just need the next generation of solutions, which is where we put the majority of our effort into. And so those are kind of the areas that I see that are really needed, and where we're working on them.
Am I allowed to ask a follow-up question?
Go right ahead. Sure.
Troy, I'm going to create some controversy on this panel,
let's
get a little
go.
more spicy. What would you say? First of all, I think hydrogen is a very expensive fuel. By our calculations, green hydrogen, which I know in Alberta we're mainly doing the one from natural gas, the blue, but green could be like, if it's just used as a replacement for natural gas, it could be 8 times or more higher in terms of the price. Blue probably in the range of 3 or 4 times higher. With the American subsidies, that really closes the gap. It doesn't get it equivalent, but it goes a long ways, and I think we'll see investments in the US with their production tax credits, which are very generous. Up here in Canada, we don't have those. We have these investment tax credits that don't close the gap very much at all. So, I mean, I'm not that optimistic we're going to see a whole bunch of hydrogen investment. I just don't see the economics working here. I don't know if you'd like to respond to that.
Happy to. You're right. There is hydrogen currently is more expensive. A lot of the folks that are doing their projects right now are struggling with the price that they're getting just to do their testing. Where that can where that can start to shift is in volume production, in distributed production, so that you don't have centralized and need hydrogen production and then need to ship it several hundred kilometers to its use. So there's lots of new technologies that are coming online that are ready to do that in a more distributed fashion. The carbon management piece is a big chunk of that cost, as well as the transportation. So again, some of the newer solutions avoid that carbon production or carbon dioxide production altogether, which eliminates that cost. So I think this will evolve over time, and I think we will get there, but we need the scale to get us there. And you're absolutely right. We are in a very different position than the same technology providers and users in the U.S. I'm not going to comment on what the policy situation will be. Somebody in the audience will probably give me heck for that later, but if I tried, so I won't. But I think that there's certainly an awareness that there is the gap between North and South, and I'm hoping that kind of helps to move things along. I think everything moves on a trajectory of development. So we saw it with solar in the 70s, where a panel was ridiculously expensive. Wind shortly thereafter, electric a little while later, and they're all starting to reach their peak. Hydrogen is just a little further behind, but it's on the same trajectory.
Yeah, sure.
Yeah, I think it's an important point that you're talking about, and I think just look at what's happening, and I wanted to just say this because it's the Inflation Reduction Act in the U.S., which you've mentioned, $370 billion of grants and loan guarantees and so on. I think what's happening in the U.S., and this kind of goes to your point, Craig, or the topic here about opportunities. In Canada, we always talk about the next, we want our startups, whether, clean tech startups, we're going to build the next generation of great clean tech companies, and we're going to grow them, and Canada's a leader. Well, what happens when you have this kind of gap between the US's, amazing incentives and Canada's, which is vastly different and inferior, I would argue, is you have, and I've worked in provincial governments, and so I know what happens is if you are backed by massive federal subsidies, like the Inflation Reduction Act, state and city and municipal governments from all over the US are probably just crawling around Canada, pulling any promising clean tech startup, hydrogen or CCS, and we're seeing it, right, to come and set up shop in their state, in their city. And it's not just happening in Canada. You're seeing that happen, and because where do the investors want to be? Where do the CEOs and founders of those small companies want to be? Well, they want to be a place where they have $370 billion in grants, certainty till 2035, loan guarantees, not to mention all of the state and local subsidies. Anyway, long rant, but the opportunities, I think, the clean tech startups and opportunities that are in Canada are at risk of flight.
The puzzling part, though, I'll let you carry on, but the puzzling part is in our current proposal funnel, we have 9 proposals from the US, and in our last round, we had 2 or 3. So
interesting.
I can't explain that, but I don't disagree with what you just said.
Interesting. Okay. Stephen, I have a question for you, and just in the interest of time here, I'll maybe if you can just touch on maybe a learning, maybe a single learning that would help for anybody that would like to play a role in economic reconciliation, maybe something that you could offer, a suggestion, or something for them to keep in mind that would help.
Well, that's a good question. My awareness started on a previous journey as I was a founder of one of the early entries into East Africa and Tanzania specifically. I actually got on the plane 6 weeks after 9/11 and had my choice of seats, I might add. When I got off the plane and started to look at that point, it was an upstream play in the southern region of Tanzania that ultimately went on to, we proved it up and became, and commercialized a very significant world-class natural gas resource by building, owning, and operating a fully integrated gas-to-power project, including having to build out all the infrastructure. My point of this is, it really opened my eyes to the neo-colonialist world of sub-Sahara Africa, of the generations, hundreds of years of the colonialists coming into sub-Sahara Africa and dictating how they were going to spend the money and build the projects. And really, I took a view that it's about a partnership. You own the resource, you own the reserves, the land around the resource, and let's sit down at the table and talk about what each side's objectives are and develop a basis of a partnership. So that's kind of where I started my journey of that awareness. And when I came back to Canada and started to really look through a different lens of, again, how we were getting projects built in Canada on that constitutional duty to consult, but getting to a point where we have to change that, as I alluded to in an earlier comment. But to get there, you got to sit down with the landowners or those impacted First Nations, Indigenous peoples, and really have a conversation about what's important for them.
Great.
And for them to understand what's important for you and get to that point where it develops into being a partnership and not just a promise of jobs when these projects are being built. Okay. And as I mentioned earlier, a level of tokenism compensation around it.
Okay, thank you, Stephen. Jackie, can you talk a little bit about policy risk and how you guys consider changes to policy, existing policy, and how that's sort of factored into decision-making for investments?
Yeah, I mean, it's really important. In any investing, it's important. And oil and gas, royalties change on you. It can have a big impact on the profitability of your projects. But with energy transition investing, I think it's even more heightened because so much of the revenue is dependent on policy. Your CCS project, if there's no price for carbon, you'll just shut the whole thing down, right? You won't even get a return on your investment, a poorer return. You'll get no return on your investment because unless you're paid money to sequester the CO2, you can't afford the energy and the effort to store it and compress it and capture it. And that's true for like hydrogen. in the U.S., where they have a lot of subsidies, you could have 70% of your revenue associated with a government subsidy. And I know we're talking about how great the IRA is, but don't forget, earlier this year, the U.S. Congress, the Republicans tried to get rid of those incentives. So it's not to say there isn't political risk with the American system as well. And so you've got to look, I think, first of all, how much is your revenue associated with policy? Then you need to really look at the stability of that policy. And we've developed a system to rate policies where we look at the influence it has, like is it achieving what the government wants in terms of reducing emissions or driving more economic development or whatever it is. Does it have stability? And that's both political stability and financial stability. So is it sustainable in that, I would argue some of the American incentives aren't. That's literally coming out of the taxpayer off the balance sheet of the U.S. government, where some of our more market-based approaches here, where the polluter is paying, are probably more fiscally sustainable long term. So we've got to consider that. We also got to consider the predictability of it all. The price volatility is a huge issue, and that's been a big focus on this carbon capture storage debate here in Canada, in that, yes, we have a price on carbon, but because it's a carbon market and price can change with supply and demand, there's uncertainty on what the ultimate price will be. There's also political problems because we don't know if the Conservatives come in, if they just get rid of the whole thing. So you got to look at how much you're depending on that and how does that policy rate. There are some areas that I think are less that rate better than others. So helping to get some perspective on that. I think there's ways to mitigate your policy risk. A great example is renewable natural gas here. BC allows you to sell into their low carbon fuel standard market if your gas is used in transportation. But they also have a requirement that the utilities blend a certain amount of clean natural gas into the system as well. And in that case, the utilities are able and willing to sign 20-year contracts for RNG offtake with a set price. So you can choose to take the unpredictability of the low carbon fuel standard price. Right, today it would look like you'd make more money doing that, or you can choose to get rid of that, shift that risk over to the utility. So right. I think there's areas where you can shift it over to your clients. I think there's areas where you can, like wind and solar. There isn't a ton of policy risk. I mean, yes, the incentives that are there are helpful, but you would probably go forward and get a return regardless. So it really depends on the investment, but it's a really new area. And I have to tell you, although all this institutional capital says they want to spend money in this space, this is a huge barrier in terms of moving capital into this space because people look at it and they're like, that looks too risky.
Okay, thank you. Stephen, when we talk about economic reconciliation, what's working, what isn't working currently?
Sorry, there's a bit of an echo. I didn't hear this.
Oh, sorry. I just wanted to ask you about, as we move into to our last portion here on cooperation, I want to know what is working and what isn't working in terms of economic reconciliation right now, you being on the ground and building these relationships. What do you think is working, what isn't?
Well, I think the first thing I want to acknowledge is the great work that the Alberta government is doing in terms of helping with funding these projects from an Indigenous perspective through the Alberta Indigenous Opportunities Corporation, which was a brainchild from the previous Premier, Jason Kenney, and certainly our current Premier, Danielle Smith, is looking to expand that. I didn't sort of frame out how we bring our Indigenous partnerships in. Our partnerships come in the form of an option once we've de-risked the project. They typically exercise at an FID or even at a COD point. So we fund the greenfield development on behalf of that partnership. And we, the financial support that we've seen through the likes of the Alberta Indigenous Opportunities Corporation, a lot of conversation that's going on at a federal program to help support that. That's truly the basis. This is not about a 40% or a 30% giveaway. The Indigenous equity partnerships, they're paying for their position. It's just, as I've advanced this project here in Calgary and as we are in the earlier stages of the development, the agreements that I've had with the chief and the Siksika Nation is that we'll fund that front end risk and that you have then an option to buy in at the point where you feel comfortable that it's been de-risked.
Great. Thank you, Stephen. Wes, I'm going to turn it to you now. Can you talk about, when we talk about cooperation, what has Pathways achieved so far with respect to cooperation? I know it's kind of a bit of an odd question, but you, being this consortium of organizations, what has that allowed you to achieve that maybe wouldn't have been achievable to this point in time if you were 6 separate companies?
Well, I think, you know, without kind of getting too down in the weeds, I think what it is, the whole idea of the Pathways Alliance and these 6 companies coming together, I think it's an acknowledgement by each of them and all of them that no single company can decarbonize and go to net zero and like win the gold star on their own. There's so much technology risk, there's so much uncertainty. The costs of building and operating these huge pieces of equipment and infrastructure is too vast for a single company. And so to go together, you're able to share the cost, share the risk, evaluate more options more quickly, negotiate, I think, more credibly and effectively as a group. And so that's what you're seeing. And you know, I've mentioned it already, the CEOs meeting regularly, the senior VPs and a senior group, which we would call steering committee inside of Pathways, they're meeting for 6 hours a week. And it's really been truly on a human level. It's really hard. Like, it doesn't, you know, we're not all, you know, kind of holding hands and everything, but it's really hard and it's really important. So you're seeing that happen. And I think one of the other one, I just wanted to pick up on the Indigenous communities and the collaboration and how that kind of plays out with our Indigenous partners. That pipeline, the 400-kilometer pipeline, you know, is adjacent or borders or crosses through, you know, 20 Indigenous communities. And so for 2+ years, you know, I guess the category would be, you know, early engagement, talking, explaining, engaging, trying to understand one another's point of view. The formal portion of that, the, you know, paper-based regulatory thing has started now. And I think what's important, though, is the importance of the chief-to-chief relationship. This isn't something that you can, you know, hire a few consultants and get a report in 6 months. So there have been a couple of formal chief-to-chief where the CEOs are traveling up and meeting with chiefs and leaders and elders from those communities. It's hard work, and I think that's a real important piece for us, the importance of the Indigenous communities and the rights holders and meaningful participation in that entire project. So anyway, I could go on, but I'll stop there.
Thank you, Wes. Oh, Stephen, did you want
Yeah, I was just going to echo that word, collaboration, which is becoming a more common word, whether it's working with technologies. I was up at the hydrogen conference earlier this year, and that was a theme that everybody was talking about. You know, you go through the exhibition halls, and everybody's got a widget of technologies developing with hydrogen, but the common thread is collaboration. And just echoing the theme here, if we're going to meet these targets, global targets, we have to, and we get the right fiscal framework. It has to be done in collaboration with governments, with all the stakeholders, including, here's a case with Pathways where you've got 6 competing large energy companies that are all coming together to collaborate.
Yeah.
And then include the Indigenous side into that discussion around collaboration.
And the entire value chain.
And the entire value chain. Very good point.
David, just, you know, I think we've talked a little bit about this previously, the importance of sort of, I guess, the phrase we use at the ASC, the all things energy approach, and you talk about the importance of all these energy, the energy system, the importance of the hydrocarbons, the hydrogen it depends on, the natural gas, at least the way you're currently discussing it. There's sort of this interrelated nature. Carbon capture is a critical piece of this as well. Can you talk a little bit about that, about why sort of the successful hydrogen economy really depends on all these components to function successfully?
Well, I see that you know, hydrogen's good at some things, electrification's good at some things, renewables are good at some things, And so it's really finding the right tool for the job. And you know, if you want to do last mile delivery, so short haul, light duty, you can swap out vehicles frequently. That makes a lot of sense to electrify. If you want to, you know, do heavier freight, longer distance type things, hydrogen has natural advantages. We're still working on that. We have a couple of trucks that are going to be hitting the road, 63.5 ton class B trains that are going to be coming between Edmonton and Calgary, testing that out. That's the Alberta Zero Emissions Truck Electrification Consortium, AZTEC project. So you'll probably see those starting December, maybe January on the highway. So that's nice to see those happening. That'll de-risk a bunch. CP Rail's been doing some amazing things with their locomotives. They have 3, I think, that are either operating or in construction, and they have big plans. So super exciting to see what they're doing. So our sister organization, Emissions Reduction Alberta, is helping both of those. A couple of hydrogen buses that are circulating around Edmonton and Strathcona County now. So if you head up there, you can see those. That's super awesome. And they've done a lot of analysis that says, you know, for the longer routes, longer uptime, the fuel cell buses, or even the dual fuel buses, are outcompeting the electric ones, especially in the winter. So it's really finding the right tool for the job. I think there's a role for everything. We have fabulous solar resources in the province. We have great wind resources. We have abundance of natural gas. We're swimming in this stuff. We're floating on it. Of course, we have lots of other hydrocarbon resources as well. So let's use them.
Perfect.
BC has tons of hydro. They should be using it, and they are. So same with Quebec. So it's the right tool for the job in the right location.
Thank you, David. Jackie, I guess this is sort of a good segue into what I want to ask you is about sort of the role of oil and gas in an investor's portfolio now. You know, in the history of ARC Financial, where does the hydrocarbon investment sit right now relative to some of these others opportunities?
Right. Well, you know, we are still actively investing in both new oil and gas and clean energy. The last 10 years has been very difficult to be an oil and gas investor. We're not alone. Everyone, including the public equity markets, did not perform well. We had the 2014 downturn, the COVID downturn, the 2015 Saudis flooding the market. Then they did it again right before COVID. So very difficult to make good returns in that kind of macro environment. However, you know, over the next decade, I think things do look a lot better than the previous decade, thank goodness, for oil and gas. I think demand will stay high for the next 10 years and likely a lot longer because there are few substitutes to oil in that kind of time period. For sure, electric cars are going to start to reduce the amount of growth and maybe even start to see oil decline, but it'll still be a lot of oil used 10 and 20 years from now. So, you know, we think demand looks sufficient for continued investment. Second thing is, the whole market and the whole world thinks it's the end of oil because they read the IEA net zero report that says we're going to like 75% reduction in demand by 2050, even though that's probably, we see that as quite unlikely. And so the stock market is pricing these companies like it's the end of oil. Go look at the enterprise value to EBITDA multiples. I mean, some of our biggest oil companies in Canada are like trading at 5 times. Some of the more intermediates are like less than 4. That's way below what the average company is trading at. So you're getting these companies like they're only going to exist for 5 or 6 years. That's what you're paying for. But we know they're going to be producing for a lot longer than that. So the other thing is the industry has shifted to focus on profitability instead of growth. So providing returns to shareholders through dividends and investor paybacks. So I think, you know, you can do quite well in that the industry is not as prone to oversupplying the market because more money is going back to investors and less into new supply. So I think the fundamentals look much, much better than they did, and I think there's a great opportunity here in Alberta. We're going to get the TMX. We're going to get LNG Canada. I'm sure those 2 things are going to happen. We'll finally have some spare pipeline capacity on both gas and oil, which has been a big problem here and made Alberta unique to other jurisdictions where you can invest because we've had these price discounts associated with not enough takeaway capacity. So it looks like we're not there yet, but in the next 2 or 3 years, that's going to look a lot better. Yeah, we have some of these policies like this cap on oil and gas emissions and some of these greenhouse gas policies that create some uncertainty. But all in all, I think the opportunity looks good here.
Thank you, Jackie. Just looking at the clock here, we've got about 38 seconds left. So we'll have to wrap up here. We've received some really interesting questions I was going to get to in our Q&A. We won't be able to do that, but I promise you we'll get back to those who have left their contact information. Really appreciate the panelists. Really thankful that they were able to participate in this. This has been wonderful. Much more material and conversation than I was anticipating. Thanks so much to the audience, and it was an honor for me to be able to participate in this as well. Thank you so much. I am going to turn this over to our Executive Director, Samir Sabharwal, who's going to come up here next. Thank you so much.